my name is Danielle Parlich, and this is Daniel Hansen, and we are here at Durfee Law Group. We are here today to talk about taxes. Tax season is approaching, and we have Daniel here, who is one of our tax attorneys, and he's going to be answering some questions today to get you guys informed on taxes. So, to start it off, Daniel, what does a tax attorney do?
What does a tax attorney do? Tax attorney, and this actually kind of depends on who you go to.
Fair.
So, tax attorney I think is a little bit broad because there's tax attorneys out there that all they do is planning. And you meet with them and they charge you a buttload of money to just tell you some theoretical ideas of different ways that you might be able to spend your money. But I feel like limiting yourself to that kind of falls short of really what a tax attorney should be doing. Another type of tax attorney is going to be your audit defense, right? There's firms, especially in Arizona, that are just dedicated to the defense of audits with the IRS, and you know that's more of just a litigation defense counsel, really. I mean, that to me is not fully what a tax attorney should be doing. The way I take it is, I'm going to do the advising part of it, tell you what different structures might help your current situation. Then I'm going to help walk you through how to actually put that in place, whether that's actually drafting the different structures that you need, or helping you, advising you through the different decisions and making sure that we're following up, that you actually go through and you make those things happen. Then at the end of the year, we're going to file the taxes for you, because we are able to file the taxes, which a lot of people don't.
That's what I was about to lead into, is how can you file taxes if you're not a CPA, because there's a lot of misconception behind that.
Yeah, and that is a question I get asked all the time. And it's funny, usually what happens is, at first people come to me for tax planning. We propose some complicated tax planning structures and different expense transactions and things like that, different investments and assets for them to purchase, and we get this whole plan set out together. They start putting it into action, and they come to me and say, "Hey, Daniel, my CPA doesn't quite understand all this and said that maybe I should look at finding somebody who is a little bit more educated or whatever. Who do you have in mind?" And I say, "Well, we can file your taxes for you, no problem." And they go, "Well, how can you file my taxes when you're not a CPA?" And it always comes down to, I have to explain to them, a CPA, actually all they have is a certification that allows them a limited right to practice law. Essentially what they're allowed to do is they're allowed to do data entry on forms that are published by the IRS. That's what they do. That's a right that's granted through that certification, but it is limited, whereas a legal license is not limited. And when I say it's not limited, it means that we get to do more than just data entry. We get to analyze your information. We get to look at the different ways that the IRS has available to report that information, and we get to also look at the different ways that you can expense things, and we can decide whether or not certain ways of filing would be beneficial or not beneficial, and we can bring those options to you and ask you which one you would like to do. I've had situations where the client's information really allowed us to file in like 4 or 5 different ways, and I came and I said, "Look, here's the 4 or 5 different ways we could file. This way here might actually raise your risk of audit, and essentially does the exact same thing that this one does here, and you're getting the same amount of return on both. And so I would recommend probably doing it this way instead. Or there's these other 3 ways which are definitely going to lower your risk of audit, but you're going to pay more, right? It's kind of a decision that they need to make. I will advise them on what, in my experience and through my different calculations, is
What the
going to
outcomes would
what
be
the
for each
outcomes
of them.
likely are, what the risk of audit likely is, and I will ask them. Everything we do is obviously legal, but I'll ask them which one they want to do. Right. Obviously, higher risk of audit. Right. You're actually going to get more money back. Not always. I've seen some where the risk of audit was super high and it wasn't even worth, whatever savings they were going to get, and it made more sense to do the lower risk version. But in some cases where they're looking at a high risk, they're like, okay, let's be aggressive. Let's just keep the evidence ready for when we do get the audit, and hopefully we can defend that and get it over with. And I've had a couple of them that do get audited, and we get it taken care of pretty easily, usually by just doing an amended return.
So you said evidence, so what are some examples that people should know to keep records and everything? Like, what is evidence that the IRS will look at?
So there's a lot of different things that can be considered evidence. Obviously, the first thing everybody's going to think of is your receipts, right? Receipts are helpful. If there's a full-blown audit where the IRS is going to inspect all your records, if we do not have the physical receipts, it is possible that the IRS will disallow. And they have that right under the code. However, we have a way to combat that. It's called the Cohen rule, and as long as you're in the right jurisdictions, such as like the Ninth jurisdiction, the Ninth Circuit, then we're allowed to use the Cohen rule. Some other jurisdictions, you're not allowed to use it. But the Cohen rule is one way that we can defend against poor record keeping, like not keeping those receipts.
What is the Cohen rule?
Cohen rule is essentially, we call it the Cohen rule because it refers to the case law, and the family's name that was audited was Cohen. Anyway, what that rule basically says is that you're allowed to estimate your expenses as long as those expenses are reasonable for a business of the type, right? So that's essentially the rule. It's very, very watered down, but that's kind of how it works. You do need to utilize the Cohen rule. You need a tax attorney. CPAs are not allowed to use case law in their filings. And so you have to have a tax attorney when you're utilizing case law. And so that's one thing that's helpful is when you have been in a position like I have where you've defended against the IRS and you've done filings and you've done plannings and you've done all those different things, you can do the filing in a way that you know is defendable because you've defended many cases of a similar way. So you can say, well, no, this is defendable. We have legal arguments that allow us to file this way. And CPAs can't do that.
Very true. So speaking of CPAs, what about for clients that already have CPAs, that have been working with them long term? How do you approach that?
So I love to work with people who are willing to learn and are open-minded. And I say it that way because I have ran into CPAs who they work as if their true client is the IRS. I know I kind of said that in way too many words, but basically they work for the IRS, not for their actual client. And so then it's like anything that you do as far as tax planning, they absolutely refuse to do it or even consider it.
Because that kind of goes back to the rules that they have to follow, whereas with a lawyer, you can look at the broader picture and give legal advice.
Right. So, they've got to follow the best accounting practices and generally accepted accounting practices. Depending on whichever firm they work for, that firm is going to have very strict guidelines and policies that they're not allowed to break. Otherwise, that firm is not going to cover any of their errors or omissions or liability. And so, especially with the larger accounting firms, many large accounting firms, they're just completely unwilling to work under the direction of a tax attorney. Mm-hmm. The more solo practitioners and more kind of independent CPAs are usually willing to work under the direction of a tax attorney. And we'll usually set that up under what's called a Cavell letter, which we've actually done a video on the Cavell letter before. Essentially what that is where the CPA will become an employee of the lawyer instead of the client, which then that protects the lawyer-client confidentiality, and it removes the liability that the CPA is going to have. It puts it on the lawyer, and so it makes the CPA a little bit more willing to do different strategies.
Sounds good. So then kind of going into more of the clients, a lot of people with businesses are thinking that, it's big businesses that only have to deal with this. So, I don't know, tell everyone what types of clients that you work with in these structures.
Yeah, so I do tax planning and tax filing and audit defense for people that are in the lowest tax bracket to people that are in the highest tax bracket.
Everyone can use it.
It works for everybody. Generally, there's been very few people who have come to me for a consult on whether or not I could do their tax return, where I looked at it and I said, it's not going to be worth it to pay for me. I've had a couple where they came to me, their income was at like $5,000 or $10,000, and they had no possible way of getting any credits whatsoever. And after looking at it, I just told them, I'm like, look, one, you don't actually owe any tax, and two, there's no credits I can get you qualified for to get you a return. And so there's no reason to pay me. Like, I'm not going to take on, in the future, if your income goes higher, like, we can do tax planning, we can do whatever we need. At this point, it just doesn't make sense to do the filing. Now, again, I've had people who made $5,000 or $10,000 who have come to me and had no problem paying the $1,000 initial fee for us to, do their tax return, and we've gotten them $10,000, $15,000 back because they qualified for the credit. So it's always worth the consult, right? Let's do the consult. Let's see if there's any type of potential, because I can look at your information, I can look at your previous returns and stuff, and so let's do the consult. Let's figure out, is there potential? And then if there isn't, we as attorneys, we are fiduciaries. If there is not a fiduciary benefit to hiring us, we're going to let you know. So that's how it works.
So kind of going back to the clients that you were talking about before, we already mentioned that you help people, like the small businesses to the big businesses, but can you expand a little bit more on what types of businesses do your clients have? Do you only help certain areas of businesses? Do you help all areas of businesses? What do you help with?
I help with all different types of businesses. I often don't really consider myself a tax attorney, right? I consider myself a business or a corporate law attorney, and that is what I focus my education in. That's what I've tried to, as far as all of my continuing education and stuff, it always is focused around the corporate law aspect, and specifically that ends up leading a lot into tax. And because of that, I end up getting a lot of experience in tax, right? But for me, I like helping all businesses, especially small businesses. In my mind, the more small businesses we can have, the more competition there is, the better the market is, the better the economy is. My undergrad was in economics, and so I'm very much an Austrian economist, at heart, and that's kind of what I base a lot of my law around. But definitely the small businesses I favor, just because I can see the most success there, right? I can see that I really help people. And with the, when you have a business that only makes like $100,000 a year, you're able to get them a $10,000, $15,000 return, they're grateful, right? Mm-hmm. Whereas sometimes I have these big businesses that I do who are making millions, and I might save them $200,000 on their tax return, and they still want to duke it out over maybe $1,000 on my fee, you know, like, and they're just not super appreciative of it, right? And so obviously the reward of helping people and making them a little bit, you know, making things easier on them is really what I'm after, right? To try to help them out. So, but yeah, I will say I don't like or reject anybody that
Pigeonhole to
right.
area.
Like it's not like I'm going to say, oh yeah, you know, your business isn't worth it to me, right? That's not how it is.
You also do like general counseling too, don't you?
Yes.
For businesses,
Yeah.
like you're willing to take that on and help businesses go through the process from start to end until they're comfortable functioning on their own.
Yes, and that's actually how I got started, was in general counsel.
Mm-hmm.
So, you know, when I first opened up, went off on my own and opened up my own practice, my main focus was in outside contracted general counsel.
Mm-hmm.
And
Covers
that,
a wide area of law.
right, which is a wide area of law, and my advancements that I have on top of my Juris Doctorate, specifically it's called the BLE, Business Law Entrepreneurship Emphasis, which is specifically in the enterprise organization that is very focused on having a broad acumen in business and everything that might affect a small business and how to get it from the start to the successful, right? To a point where they can scale and they can feel comfortable going off and going on cruises all year long and doing whatever they want because their business is successful, it's working.
True goals.
Right? And that's what I focused everything I did on, was trying to learn and optimize that. And so I started out helping businesses get to that point. And in that process, I found that many businesses were lacking in the tax preparation and tax filing area.
Mm-hmm.
And that as I improved processes, businesses, CPAs refused to file taxes appropriately because it was above their head. They just didn't understand it. And that led into me offering to do tax returns only for the clients that had retained me as general counsel, right? And that's where I started. I was like, okay, I'll do that, right? And I will say that's where I started as far as personal practice goes. I had actually defended against audits for a couple of years before that, but so I already had a pretty good knowledge of the tax world, how things can be defended and all that. But definitely that's where, as a private practitioner, it started to kind of take off, because no matter how much I told my clients, please don't advertise to people, please don't pass the word along that I file taxes for people, because you know, I just didn't see me going into that field at all, or I didn't think that it'd really be that effective or helpful to have that a big thing. So no matter what I said to my clients, they still passed it on. I mean, the next year, like I had just hundreds of people asking, like, hey, this person, you know, so they're all saying you do amazing things, or people calling up, hey, I've been told that you're an amazing CPA. I'm not a CPA. That's always I'm not a CPA. Well, how'd you do this person's taxes? It's like, I can't really tell you because they're my client. I have confidentiality, so. No, that's kind of where it took off from, was just, you know, the word got out that I knew how to do it, and that I did it well, and so then it got to a point where I started filing a lot of taxes, and which is fine. I mean, it's something I enjoy doing, and it's something that can help people. So, and I've really come to actually love that area, and you know, so I like it. I should mention, it's not like I hate tax law, right? Like, it's not like I was like, before getting into it, like I hated it. I mean, in law school, I wrote my dissertation on a tax law subject. That's what, like, so it's obviously something of interest.
Always had
to
an
me.
interest.
Right? Yeah, and you know, and so I definitely like it, and it was usually more of a thing that for fun, like on my free time, I was studying tax law, and so I didn't ever want to like make it more of a thing, and I've actually enjoyed it since it's become a bigger part of my practice. So
good. And then going into a little more specifics with the tax side of things, you mentioned earlier with the credits, when you're looking at clients and you're trying to help figure out what credits they qualify for, because you mentioned sometimes your clients don't qualify for some, qualify for other ones. Just what are some credits that clients usually can qualify for?
So the biggest one that a lot of people can qualify for, but they don't because the return's just not filed well, is the earned income credit and the child tax credit. Those are huge for families with children, with young children that have some side income, different things like that. Often the person they go to help them file, they file everything on a Schedule E instead of filing a Schedule C, which makes zero sense to me. Why they would do that? Like, oh, you got a 1099. We're gonna put it on a Schedule E. We're gonna say that it's all passive income, and we're gonna make you pay capital gains on all this income, and it's just ridiculous. Mm-hmm. Like, I had one client for years. They had been paying on top of their like $50,000 in withholding that they had each year. Combined, they had an income, just under like $200,000, and for years they were paying an extra $20 to $30,000 on top of their $50,000 in withholding they had from their jobs.
That's a lot of money.
We're talking about a teacher and a construction foreman. That's this couple, right? It's like, okay, typical middle class, and they're paying an extra $20,000 on top of their. I mean, that's the teacher's salary was only $50,000. So like, why is she even working at that point, right? Like when they're paying $70,000 in taxes.
So after you did all their stuff,
right?
What
So they came to me, and I found out the teacher owned some land which she had been leasing to a farmer for $10,000 a year, and the way that their CPA had been filing it was causing them to pay $20,000 a year on that $10,000 on income.
That's
absolutely ridiculous. Absolutely ridiculous. Anyway, so I fixed it, and they went from paying an additional $20,000 a year to getting $25,000 back that first year.
Yeah.
And I remember when I first came up to him, I'm like, okay, so this is all I did. I just made this switch and reported this correctly, and you're getting this much in a return. And the husband looked at me. He's like, oh, so we only have to pay that much this year? And I was like, no, this is a return. He's like, what do you mean? I was like, they're gonna pay you this money. He's like, they're gonna pay me that money? How did you do that? I was like, I just had to report it correctly. That's all I had to do.
Well, that kind of goes into this area of law, because yes, taxes can be a business, but also can be on the estate planning side. So that's another perk, I would say, of working with a tax attorney, is you look at the entire estate and their assets in whole, including their personal assets on top of their business assets. Do you kind of want to speak more on that, of the personal side, a little less on the business side, of how that plays into taxes?
Yeah, and for a lot of people, have different things going on in their lives that actually do qualify for as a business or qualify as business activities, and for many people, especially people who are just like, they were raised as you get a W-2 job, all you ever do is W-2 stuff. You don't own your own business. That's super risky. You should never do that, right? And that's something that was ingrained into people's brains for many, many years, right? And for those people, often they are getting hit hard on taxes, and often just by reviewing, for people like that, when they come in just to have an estate plan, just to plan for, what happens when they die, often we can look at everything they've got going on and be like, hey, you actually have a couple business activities that could be separated into separate business entities and could possibly save you on taxes. You know, now I will emphasize, for estate planning, we're never doing anything for tax saving purposes.
Correct.
Right? Everything is done for estate planning purposes, and that's important, especially because, you know, if you do it specifically for like a tax planning purpose, then that may actually make it so that tax planning benefits don't help. You know, but
that's the nice part of having that attorney. You can look at the full picture and figure out what's best for the client.
right, and we can look at everything, you know, and it's important to have a tax attorney who has that ability to not just analyze your tax situation, but also analyze your estate planning situation
and family needs,
and kind of all the different areas, right? That's one of the benefits of kind of the acumen that I went after. It assisted me in understanding how all the different areas of law might affect one thing. You know, that's kind of the whole focus on that. And so I had to learn the estate planning stuff. I had to learn the family law stuff. I had to learn all of that just so I could know how to best advise a business, and that then also helps with tax planning and doing the tax filings. But no, specifically I think that, you know, there's a lot of things in estate planning that can help with your taxes, and can give you a lot of tools as far as making sure your taxes are done right. Which is why one thing that we do is we kind of run a promotion for people when they first come in for tax planning, or sorry, tax returns. And what that is whatever you end up spending on your tax return, we will actually apply that as a 100% credit towards the creation or towards the estate planning bill, right? So, because that can be kind of pricey. But the main reason we do that, one, is as we're looking over your tax return, we're going to find a lot of different things that would be helpful in a structure and in an estate plan that would help you manage your life better and make things easier and make more sense.
Especially in the long run.
Especially in the long run, and it'll make it so that, you know, if we put certain structures in place, it'll make it so that if you're ever sick, somebody could easily come in, look at this, and understand what needs to happen, and they can just take it, right? So it's almost like scaling your life. And we talk about scaling a business, we can also scale a life, so that things are very easy for somebody to just step in and help manage your affairs while you're sick or something's going on, right?
Or help it set up for your kids in the future.
Or when you do pass away, so your kids can just come in and take over and make sure everything keeps running.
Because no one wants probate.
Right, so no one wants probate, but also people want to provide for their kids even after they're gone. They want their assets to be that. They want them to be assets that can actually give value to their descendants over time. And so that's part of what the estate planning does, is it helps us do that. And because we're scaling your life, it also helps us have tools to make your taxes more beneficial. So, and I'll say there's so many times when people come in and we see it and we're like, look, you've got these two businesses that you're running and it just doesn't work. It's just the way you've got it. If you do some estate planning and we just get these business entities set up, you'd save so much more on taxes, you know.
Yeah.
I mean, one example I would give of a client who had come in and where I looked at it, I was like, look, there's this estate planning stuff you could do. I have an example of that would work. You know, it was actually about a year ago, we had a client come in who had a situation where she was going to suddenly have a very large tax burden, and she was worried about it. And her CPA initially said that she wasn't going to have any taxes to worry about, and then she spoke with another attorney, and the attorney says, no, you're looking at a lot of tax liability, and you need to go talk to a different CPA. She went to talk to a different CPA. The CPA looked at everything and estimated that she was going to pay about $200,000.
That's a
in
hefty
taxes.
bill.
Yeah, it is. It's a huge bill, especially when, you know, her annual income was really only around $80,000, so not very high. just at the kind of the lower threshold of middle class, really. And so she was really worried about it, and she was referred to us. She came in and she's like, look, I need to know what to do. Can you look over everything? I looked over everything she had in place. I looked over her previous returns, and I figured out, hey, look, you've got these other couple of things that you're doing that we could actually classify as business entities. Not only that, you don't currently have a trust, and you don't have these things that could help. So she paid us, to set up a large estate plan to really get everything solidified, and then she had us do her return at the end of the year. And when we went through and did the return, I had the estimated return from the CPA, from the original CPA, that was like $200,000, right? So I had that, and I looked at that, and I'm like, well, let's see what he did and see what we could do better. So we started with that, and then I decided, you know what, let's do this as if she hadn't got these structures in place. Let's do it as if she had just come to me, at the end of the year, and we didn't do any of the planning, right? And so first I prepared it that way just to see what it would look like. And I with some of the things that I was able to do just as a tax attorney, I was able to take what would have been that $200,000 that a CPA had done, and I got it down to about $40,000 in tax liability.
Okay. But then you did the estate planning with it.
Then from there I did the estate planning, and I did it how it actually needed to be filed because of the things that we had put in place, and she got $15,000 back.
So to go from owing $200,000 to getting $15,000.
Yeah, she got a $15,000 return, so around there. So, yeah, she tells everybody about it. So,
I'd be very happy too if I was her for that.
Every time that she then comes back for a tax planning meeting, and we have other people in the office that she hasn't met before, she then brags to them about what I did. So,
well, that goes back to what we originally were talking about, of the perk of going with some tax attorneys to get that overall look into your entire estate plan and to look at the different things you qualify for. So
yeah, and it's helpful. I have another example. A middle class family is a husband and wife, and they've got a couple kids, and they are kind of higher end of the middle class, but they were looking at about $70,000 to $90,000 that they were going to have to pay in taxes. They were referred to me from actually my old boss from before I went to law school. I now do my old boss's taxes, so along with his estate planning, and I am his general counsel now, is what he says. So anyway, they were referred to me, and we ended up getting them around $48,000 in a return, and they were just beside themselves, right? And they didn't have the estate planning in place yet. They could have got more had they had the estate planning in place, and I let them know that, and I just explained it to them. I'm like, this is how it looks, and this is what it could have looked like. They actually could have gotten about $72,000 back had they had that stuff in place. And I was like, this is what it could have looked like if we had these things. And they said, well, how much is it to get that done? And it was a significant amount of money, but I told them, I'm like, this is what it would be. And as soon as they got that check from the IRS, they then wrote us a check, and we got their estate planning done.
Well, that helps them for the next year and everything. It may not help them for that year, but at that point you get that return on your taxes, and then you can start planning for the future.
Yeah, and so that ends up being a one-time expense,
and
then it'll help them
in the long run
for the rest of their lives. Unless something changes in the tax law, which it does all the time. But
fair.
But I will say the way we do our estate planning, we have ways of making it so that it will adjust with the laws. So anyway, well, thank you for joining.
Yeah, hope you learned a lot about taxes. It's very intricate and detailed, so
yeah,
it's nice to have someone with experience.
Follow our page, like the video, things like that. stay tuned for more information. Obviously, if you have questions, if you're wondering, should I talk to a tax attorney? It's a free consult.
Mm-hmm.
Give us a call. Let's look over what you got going on. I mean, all you're going to lose is an hour.
Actually recording now.
That's cool.
At this point, I'm gonna have more blooper content.
You still recording here? Need little
Save our money.
microphones.
That's what I said. Little microphones.
Little microphones so you can pick us up well. You know, you're filming my bad side here, so that's okay.
Should have gotten here earlier.
Okay, if you like paying taxes, if you just love giving your income to the government and you just totally trust what they're doing with that money, don't watch this. It's not for you.
Sweet. So, 3, 2, 1, start.
Hello. I love Matt's face over there.
Hi, my name is Daniel Hansen, and I'm Nell Parlich. We are both attorneys at
I think we got some
Group.
therapists. I don't know. They could probably help you with that multi-personality disorder thing.
Yeah.
That one.
That was not-
That one curved. That one for sure curved. I admit that one.
I was like, that
That
first
one.
is like it's like a direct beam right into your hand.
It
So I
is
was like,
long.
we're the government and we're here to help.
All of your available options.
Yeah. Sounds really boring. Okay. Ready for this?
Yeah.
Hello.
No. No, why don't you start us off?
Are you ready? Do you want to like do a thing again?
3.
You need a little action, kind of thing.
All right. 3, 2, 1, action.
Okay. I forgot. I forgot. I'm like
Welcome
trying to
back.
figure out how to say it.
We're recording?
Yeah.
Yeah?
Mhm.
Hello.
Dear God. Oh my What's the ROI thing for
Return on investment.
Just
Oh
like,
yeah, return on investment.
no, but I was just like, this entire time my brain was like, what is ROI supposed to be
It's
here?
not
And that
tax
totally
return-
makes
tax
sense.
term,
It
it's-
totally makes sense now
Sounds
that you
good.
say
Return on
that.
investment.
That
So
was good.
Yeah.
Other services that we provide at the firm.
I'm gonna write return on investment in my brain.
But you should look at the camera, sister Andy. That's
That was good though. That was good.
But I can't. It's like I'm not just gonna like stare at the camera as like you're talking. I feel like that's weirder.
Yeah. We do have about like just shy of 20 minutes of content. Granted, the first 5 minutes was us acting fools, but
Us.
I was trying to be a collective we. You and I were the only ones who weren't. But
I was just ordering a sandwich. Let's check the tape. Hi, my name is Daniel Hansen, and I'm Nell Parlich. Hi, my name's Daniel Hansen, and I'm Nell Parlich.
That was
not-
that one hurt. That one.
That was not-
That one curved.
I got my my orange socks on. I think they're like best dad socks or something. On the bottom one says work
Okay,
hard.
it's
the other says
advertising
play
your
hard.
socks.